to the daily insights that matter. We begin today's DITM by talking about the inflows into the equity mutual funds, which have doubled in the month of September 2022. Now, according to the data released by AMFI, equity-oriented schemes witnessed an inflow of 14,099.73 crores compared to an inflow of 6,119.58 crores in the month of August. Let's understand whether this trend will continue going forward. The monthly equity fund investments in September reversed the trend of declining inflows as the net fund flows jumped 130% from the previous months. Now, the inflows into equity funds were down 31% month on month in the month of August and 42% in the month of July 2022. The contribution of SIPs rose to rupees 12.97 lakh crores in the month of September, which is the highest ever from rupees 12.69 lakh crores in the month of August. While equity mutual funds saw an inflow, debt mutual funds, who were the star performers in the month of August, were the worst hit with an outflow of 65,300 crore rupees in the month of September alone. The total AUM for the mutual fund industry stood at rupees 38.42 lakh crores as of September 30th compared to 39.33 lakh crores as of August 31st. Now, it's important to note that despite the markets being in red last month with the benchmark Nifty 50 declining by almost 3%, the inflows into the equity mutual funds remain steady. This displays investor confidence in the Indian markets as India continues to remain a bright spot amidst fears of recession globally. Additionally, the growth in the SIP flows also goes to prove that small investors are showing consistent faith in mutual funds and consider them to be a great option for wealth creation in the long term. The debt outflows could be attributed to companies withdrawing money at the end of every quarter to cater to their advanced tax payment needs. That being said, the trend in equity mutual funds is expected to continue as more and more Indian investors have shown faith in the Indian economy and markets despite the market volatility and the global negative trends. Now, the centre's gross direct tax collection for this fiscal year stood at rupees 8.9 lakh crores until October 8th. This is 23.8% higher than the collections during the same period last year. Now, while the gross direct tax collection stood at 8.98 lakh crores, refunds amounting to rupees 1.53 lakh crores have also been issued during this period. Hence, the net collections amounted to rupees 7.45 lakh crores, which was 52.46% of the total budget estimates. The union budget for FY23 estimated a direct tax collection of rupees 14.2 lakh crores against 14.1 lakh crores collected in the previous fiscal, which is FY 2022. The corporate tax and the personal income tax, which forms a part of the direct tax, grew by 16.74% and 32.3% respectively. Now, with inflation running between the 6 and the 7% levels, it is imperative that the tax collections show healthy growth above the inflation rate. This strong economic growth coupled with better reporting have been supporting the tax collections so far. The tax collections have been a bright spot for the policymakers as well, with indirect tax collections also showing strong growth as the GST collections have remained above the 1.4 lakh crore mark for the 7th straight month in September. While the government expected direct tax revenues to rise by 25 to 30% in this fiscal year, this will help offset a large part of the expansion in the food and fertilizer subsidy outlays, if not all of it. So what does all of this news mean for you? The rise in equity inflows is testimony to the fact that despite global headwinds, the investor confidence in the Indian equities continue to remain strong. This will have an indirect positive impact on you. The robust direct tax collections and an expectation of 25 to 30% growth year on year will aid the revenue side of the government's finances amidst rising expenses and aid in keeping the fiscal deficit within targeted levels. This will have an indirect positive impact on you as well. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.